Been a rough ride for Lyft investors. Those shares have fallen 35% from their all-time high on the day of the company's IPO. Today, Susquehanna thinks it's the time to buy the stock. They upgrade it. They raised the price target to $80. And the stock was up better than it is now. It's been sort of declining through the session as the overall market has lost a little bit of its luster. But this is an interesting call. Pete, Doc, who wants this one?
I disagree with the call, so I guess I'm on the wrong side of what Susquehanna sees here, because my problem with both Lyft and Uber is, when are you going to make money? Show me the money, right? When are you guys going to ever make money? Because the projections of when they'll make money and how much money they're burning is pretty incredible. Now, are they gaining, share against this different competition and so forth? Absolutely. And you look at Lyft with 40% market share, and that's great. But when do they make money?
That's the bet, though.
Yeah.
These guys, Susquehanna, these folks, guys and gals, believe Lyft has ample opportunity to bring costs down as a percentage of revenue over the next several quarters. That's one of the bets.
Yeah.
Okay?
So that's
expect Lyft to be more levered to the more rational promotional environment. Means they're going to not be as promotional. Okay, those are the biggest issues, as you say, that hang over this thing.
Yeah. I just disagree, because I don't see how they're not going to be able to do that. They're going to have to continue these promotions. They've got to draw in folks, because the competition is there, Scott. I mean, these guys are literally McDonald's and Burger King across the street from one another. So people have to make a choice. When they're making that choice, who do you pick? You go with the promotion, right? And that's the problem. Is I think they've put themselves in a position where it's going to be a really long time before they really actually make money at either one of these two entities. They're great for all of us. I don't know how great they are as investments. As a matter of fact, I don't think they're great investments.
I think Uber is the better of the two. I'm highly disappointed in the performance of last week. I think I mentioned to you, I think it was last Monday, I got chased out of Amazon. I bought a bunch of names with the cash that was raised.
Oh, right, you bought Uber.
Uber was one of the names. It lifted, and it's failed miserably in the last 5 days.
When do you pull the ripcord?
Well, it's getting close.
So Dara Khosrowshahi, the CEO of Uber, was at the Economic Club of D.C. today. Really one of the first times since the IPO we've had a chance to hear from him and their earnings report. Let's hear what he said about what he thought was at play on the day of the IPO, why things didn't go all that well.
I think that actually the timing of our IPO was very much aligned with our president's tariff wars the same day. So I think we got caught up in a bit of a market swirl, and there's nothing you can do about that. And what I tell the team is, listen, short term, the market can be a voting machine, but long term, it's a weighing machine. And we are focused on the weighing. We have a 6-month lockup, so no one at the company cares anyway what the stock price says now. It's a bunch of traders going in and out. So it doesn't really affect us. And I think if we work on building a great enterprise, the market will take care of itself.
I mean, that's fair to some respects. It was a stormy time on the street. I get the points that Pete
sounds like an excuse.
Raised. There are issues around profitability and the like.
Okay.
No?
Well, it's becoming popular for CEOs to blame a bunch of traders for throwing around the price of the stock. Why don't we attract the institutional investor base into the stock after an IPO? Scott, there's plenty of successful IPOs. You highlighted them before during this show. It's about the IPO itself. There have been many events that have occurred since that IPO that you would recognize the value of Uber if it was there. You also got an earnings report, and really a disappointing, and again, I own the stock, and a very disappointing reaction to that earnings report.
So you just IPO price, and that was it, and then it started going lower again to the open price of 42.
And this ain't horseshoes. I mean, you know what? That doesn't mean anything. This is you look at what they've done, Scott. They just have not performed. And the fact that they got close and kissed it, that's great. But how disappointing is this when you consider all the hype that went into Uber, not just going into the IPO, I'm talking for years. When are they going to IPO? When are they going to IPO?
So
this excitement.
That's Mark Cuban's point when he joined us a few weeks ago. They waited too long. And they're not, in his words, these are Mark's words, not mine, they're not a growth company.
Right.
There's nothing exciting.
Totally. Well, and then they squeezed the nickel till the buffalo screamed. I mean, they literally, both these two companies, when they came out, Scott, they wrung every cent out of it that they could. I don't blame them for that. Every entrepreneur should. But when you do that, and then you don't provide what Pete and Joe have said, when you don't provide that earnings growth and profit, then why are you going to stick with it? I mean, I was surprised they actually got above the 60 billion raise level on this one.